Hello everyone, David here from WaveTrader. Today I want to talk about Elliott wave, and if you've read my ebook, I talk a little bit about Elliott wave there, and it's a very complex topic, and it's not something you can just read at once and get, but I'm trying to break it down here in its most basic form and simple form so that you traders out there can at least have a working knowledge of it. On the screen here, it's a graphical representation of the 5-wave move of a typical Elliott wave, the bull market. Now, I apologize for my lousy drawing skills, but at least you can see what I'm trying to say here. So essentially, the most basic form of Elliott wave tells you that the market moves in waves, and our aim is to actually target the third wave because that's where the money can be made. Most times the third wave is the longest wave. Sometimes it's the fifth wave, but most of the time the third wave is the longest wave. We call it an extension. Now in Elliott wave, there are 3 rules that supposedly cannot be broken. The first one is the third wave can never be the shortest wave. So bear that in mind when we look at some of the charts. The second rule is the second wave can never go beyond the start of the first wave. And the third rule is the fourth wave cannot cross into the same area as the first wave. So you can rewind this video and rehash the rules again. And at the same time, you should go to the ebook, the Zero to Hero basic training course I gave out, and study Elliott wave. So let's get into this. This is the basic graphical representation of how the Elliott wave of the bull market looks like. So essentially, what we want to do is target the third wave. Now, this line that I drew here, this is the conservative way of getting into a trade when you are using Elliott wave. But I can show you, and I will show you, when you trade my system, most of the time we can enter from the beginning of the third wave. But the best place to enter is usually between the second and the third wave. So anywhere between these points, between point 2 and 3, that is, in other words, between this third number 3 here and this line here, is the best place to enter a trade. So I want to show you that. This is how Elliott wave will look like on your chart. So you can see the first wave, second wave, third wave, and you can see it's extended, fourth wave, fifth wave, and then we have the correction. So another place I would like you to go and read up on Elliott wave is from Baby Pips, okay, because they have a very simple way of explaining it and concise. So if you're a little bit confused after reading the ebook and watching this video, please go to Baby Pips and read up a little bit about Elliott wave. So this is how it may look like on your chart. It's not always going to look like this, and I want to prove this to you. What do you see on this chart? Can you identify the 5 waves of the Elliott bull wave here? I'm going to give you a second to look at this, and I'm going to show you how to identify it. Okay. So these green lines I've drawn on the chart will show you how to identify Elliott waves. As you can see, this is the first wave, this is the second, this is the third wave, this is the fourth, and this is the fifth wave. So the 3 rules that I stated earlier, you will notice that these lines did not break any of the rules. Okay. Now bear in mind, it will not always look very clean on your chart. Sometimes it will look very elongated and rough, and it takes time. You need time to learn how to see the waves. And mind you, Elliott wave is composed of fractals, meaning that there are waves within waves within waves. Okay, so at any point in time, you will notice that there are waves between waves. So don't get so hung up on looking for waves that you can't see the big picture. And another thing I want to point out here is this is the monthly chart. Okay, this particular chart we're looking at right now, it takes 1 month to form every single candle you are seeing here. So this particular 5 waves that I just counted started from 2001 in June and ended February of 2008. So that's about 7 years. So you can see that these things occur on all time frames. Now the second chart we are going to look at is the GBP card, and this is a weekly chart, meaning that every candlestick you see here, it takes a week to form. So I want you to look at this chart for a minute if you can identify the Elliott bull wave here. Mind you, there are so many waves here, okay? This is a bearish wave going down and this is a bullish wave, but I want you to just identify it for yourself. Okay, let me show you the wave I see. So as you can see from here, I'm discounting this point, okay? It doesn't mean that I don't see waves here, but I'm just teaching you about the bull wave right now. So this is first wave, this is second wave, this is the third wave, the fourth wave, and the fifth wave. So I hope that you were able to notice that. Let me go back and show you again. So this is how the chart looks like, okay? Without the lines drawn. And this is how it looks like with the line drawn. So with time and practice, you will easily begin to see the waves for yourself. Let's look at another chart. This is the USD card daily. Every candle here takes a day to form. I want you to take a look and see if you can identify the bullish 5 waves here. Okay, let me show you what I see. As you can see, this is the first wave, second wave, third wave, fourth wave, and fifth wave. And then the trend changes direction and starts going the other way, and here we have another first wave, second wave, third wave, fourth wave, and so on and so forth. Let's look at another chart. This is the Euro Aussie chart, 4 hours. Every candle here takes 4 hours to form. Can you see the 5 waves in the bullish market here? Okay, let me show you what I see. So as you can see, this is the first wave, second, third wave, fourth wave, and fifth wave. This is the GBP USD 1 hour chart. Can you see the wave formation here? Okay, let me show you what I see. So we have the first wave, second, third, fourth, and fifth. Another iteration of this is this. You can see here, first wave, second, third, fourth, and fifth. Okay, then first wave, second, third, fourth, and fifth. So now you begin to understand what I'm trying to say, that there are waves within waves when you are looking at the Elliott wave. So I hope you have a basic understanding of what the Elliott waves look like, and if you can get this and you master it, it is very powerful, because that means for each time you open your chart, you have an idea of what you are looking at. And another thing I want you to pay attention to, look for waves in a trending market. Don't try to count waves in a sideways market. That is just you looking for trouble, okay? Waves are easily seen and counted in a trending market, in an uptrend or in a downtrend. Okay, I'm going to make another video about the bearish Elliott wave, and I hope you understand more as we go on from there. Thank you very much.